Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at some macro data, some legacy charts. It's a holiday today and the US markets are closed. Crypto markets, of course, are open and never close. Starting off with the fund flows reports globally from CoinShares here, negative on the week, about what you'd expect seeing this price action from last week and in this week. If there's anything that's going to save us here in crypto, it's going to be legacy pushing all-time highs potentially. At some point, it's going to get harder and harder for crypto to continue to fall if legacy is pushing all-time highs. That's the good news. The good news is S&P and the Qs look great, probably set up for a great week. Crypto here obviously does not look great and continues to just bleed lower. ETF Flows could save us this week. Sailor could save us. Any one of the other companies buying could save us. Who knows, right? But until that happens, it's hard to be bullish. It's easy to say, oh, hey, we got all this stuff happening and blah, blah, blah. And, oh, volatility's low and there's this and there's that thing and there's this other thing. You can say that, but the price is the price and it's going lower until it stops, right? So that's just the state of the market that we are in at the moment. iShares still had inflows last week. Most of the outflows coming from BTC, a little bit into Solana and Ripple and Sui. Looking at the 30-day rolling flows for BTC, they have flipped more positive, and we don't need much, right? We don't need a ton of inflows anymore because there's only X amount of coin. More and more of that coin is going to probably longer-term holders, not necessarily short-term fast money. So it's going to take time. But how this looks is still fairly bullish. We're seeing decent flows over a monthly period. This is the gold ETF over the past year, also seeing decent flows, not great, not historically well above average, but continuous flows. That's what you want to see. You just want a steady state. You don't want a spike in flows. That's usually indicative of more of a retail top situation. Look at the annualized basis on CME. This is all the way down to 10%, which is high. For any other asset, for BTC, it's quite low. So I don't think there's any one thing that is necessarily going to save us, or this is it, right? There's none of that. It's just we kind of have to let the market have its little temper tantrum here. Looking at the Bitcoin reserve bills in the United States, some of these are a partial reserve or full Bitcoin reserve. Some of these have been rejected already. But this is a decent little tracker. It'll be interesting if Arizona and Utah are the first to get their reserve bills passed. And many of these pensions in these states already have exposure to MSTR or Bitcoin ETFs without an explicit mandate from some sort of reserve for the state. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to our trading style. You can check out Kraken Pro at the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. Looking at the old BTC here, not where you want to be if you're bullish. Just isn't. Again, we can point to news, headlines, future expected outcomes of XYZ. Sure, I'm not going to disagree. But the technicals are clearly still in bearish territory. This is all uncertainty from the cloud's perspective. And the fact that we have a very large cloud here gives us a little room to play on the bearish side. 84, 85, 86, 87, 88, whatever it is. Still in the cards, definitely. Anything above 100, and we can say we are more bullish. But you can't really be bullish until we see it. You really can't. At least if you're being honest with yourself on trend metrics. Even if we just use a simple 1050 moving average cross, back tests extremely well historically for BTC. Can be noisy at times, but it as a baseline tells you if you don't believe in the cloud, fine. But you got to use something. Just not where we want to be from a bullish perspective. Sol breaking down, ETH broke up, broke down. Just not a lot of bullishness going on in the majors at the moment. Certainly not a trading environment conducive to sick gains quickly that many people are seeking. Looking at the calendar for the week on the legacy side, bunch of Fed speak all over the place. FOMC minutes, I don't think those will be too impactful. PMI home sales, I don't think anything super big or important. This week, the week after this week, we've got PCE, which is probably more significant than anything this week. Looking at the Fed rate probabilities, we are pricing in one cut for the year, just barely, and that can obviously shift pretty dramatically depending on economic data. But that's all we're probably getting this year. We may see that slightly sooner, depending on the data, but especially for alts really need cheap money. So to see rate probabilities where they are, probably why alts are struggling a little bit. Looking at inflation, we've come all the way down to around 2%, popped up a little bit, but for the most part, this is going to be noisy around 2.25%, 2.5%, unless something dramatically changes. You're seeing CPI catch up with that eventually. The Cleveland Fed nowcast has CPI for the month 17 days in at 2.81. We're seeing PCE come down. Core CPI is coming down. So we're getting there slowly. We're getting there slowly, but nothing that's screaming the Fed should cut just yet. Stuff like Doge helps. And it's amazing that despite all the people that are laid off or getting buyed out or the headlines that we're seeing, this doesn't really move the needle that much. I mean, $327 per taxpayer. It's not nothing. It's helping more than it's hurting, hopefully. But it just goes to show you what a behemoth this U.S. bureaucracy has become. That despite all of these actions, it's made a little dent, but not a super significant dent in the debt here. Looking at some of the individual components of inflation, oil and gas continues to be weak, bearish, down around 70. So that's helped gas prices. Gas prices here on multi-year lows. I think in my area, it is sub $3 for a cash price. So that's something we haven't seen for many, many years. And that certainly helps people who are commuters or people who use a lot of gas, obviously. Always interesting to look at the EV charging prices, how they break this down per state. California has a ton of chargers. I don't know if there's anything useful to see from this data yet, but it is interesting that the data is being collected at the very least. Looking at the used car index from Manheim, kind of stalled out here. When you're looking at these charts, it's important to see how much have we pulled back. You know, this is kind of another way of looking at inflation. And then what is the pre-pandemic trend? Are we back to that yet? Not quite on the used car index. And maybe a little bit more troubling is the fertilizer index, which had bottomed for quite some time. 2023 to 2024 is rising again here. And you can see the pre-pandemic level, post-pandemic, didn't quite get back to the pre-pandemic level. This wasn't really rising either. It was just sort of flat. So this, of course, could be all sorts of things. But if this works its way into the food supply as far as prices are concerned, not great for inflation. GDP coming down a little bit on the estimate, still above the 2% blue chip consensus. And we still aren't anywhere near a recession from an NBER perspective based on the numbers. It's just not what we're seeing. Now we can change the numbers after the fact, or we can change the definition of a recession after the fact, but it's hard to call it as it's happening based on a new definition, because then you're just moving the goalposts, right? This is probably the most interesting thing on the liquidity side for the US, outside of this whole gold Fort Knox stuff that's going on. The reverse repo, which holds an inert amount of money, is draining here quicker and quicker down to its lowest level. In a couple of years, we've drained over $2 trillion out of this thing, which has acted as a positive liquidity event. So if we start to run into liquidity issues, the Fed will have to act, somebody will have to act to inject more liquidity into the ecosystem. In some ways, this has counteracted QT since QT started. And without that, going forward, we may run into some problems, of which BTC would eventually benefit from. But much like the SVB weekend, bearish first, then bullish later is how that would probably pan out. Looking at the bond complex, not really much to say here. Still ranging bearish. The most interesting thing here is probably on SHI. You're getting a little bit of an inverted head and shoulders here. But across the board, I don't see a great argument for jumping into any of these just yet, TLT, IEF, or AG, as far as a trading position is concerned. still very much just ranging and down. Looking at the yield curve is maybe trying to uninvert or reinvert, sorry, again. That would be super interesting. What a headline that would be. After being inverted for the longest in history, would be very interesting if it reinverts again. Highly unlikely, but the way this is headed, you never know. You really never know. Unemployment ticking down to 4%. It's going to be interesting to see post DC layoffs what the unemployment's going to be for the country, how much that's going to uptick. Post deportations, how much unemployment's going to uptick. Still kind of a murky mess here in regards to near-term expectations of any data points. They look fine now. Everything looks fine, which is probably why legacy looks fine. But I think the longer-term outlook here is still less obvious. I'm going to skip the S&P and the Qs because I looked at those last night. We had no data today, obviously, and they look great. They're at all-time highs. There's many things that are just sitting at all-time highs, largely because two of the components, NVIDIA and Apple, have pulled up significantly over the past couple weeks. Based on the daily cloud, you still wouldn't touch this. You could say, well, you've missed 15, 20%, whatever it is. Yeah, you have, but on balance, tends to keep you out of trouble. So what do you want to see on NVIDIA from a trend perspective? Bullish TK cross, price above cloud. You do have earnings coming up later on in the month there, but this is still ranging. It's just very helpful for the indices if things like NVIDIA and Apple are pulling up. Huge bounce on Apple. Again, you could say, well, if you would have bought here at the bottom, blah, blah, blah. Okay, go ahead. Go ahead, right? But from a trend continuation perspective, you always want to see survival of bearishness first. It's the same thing with BTC. I mean, we can go and look. You could say, well, you could buy here. There are lows here. This looks okay here. But I'd rather buy closer to the bottom of the cloud, me personally. So looking at Apple, getting a potential full reset of the cloud, basically. You went from bullish to almost entirely bearish here. The next real deal long entry would be everything flipping back to bullish. Same thing with NVIDIA. Microsoft not in a bullish spot here. It's been ranging for over a year. Regardless of news or headlines, it just doesn't look like it wants to go up at the moment. It's at the bottom of the range. Not a place that I like to live. So nothing to really do there, but it also helps that this hasn't been crushing lows. This hasn't broken down yet. It's a large component of the indices, obviously. Then there's Meta, which just continues pushing all-time highs. Netflix continues pushing all-time highs. Good things happen above the cloud. That's where you want to be. That's where you want to live on anything. It's hard to be bearish above the cloud. Is this overbought? Probably. Is there an entry here at the moment? Probably not. But it's really hard to argue that that's bearish. Same thing with Netflix. Just a clinic on being bullish above the cloud. That's why it's always important to catch a ride on the train as it is boarding or makes brief stops along the way at the key June, and not by the time everybody's talking about it. By the time everybody's talking about it, the move is done. That you really wanted to be in this as it was trending, not when it's up a bunch. Amazon also looks fine. Doesn't look great, but it looks fine as far as trend is concerned. No threat to bearishness there. Google rolling over a little bit. Back in the cloud, kind of a mess. I'd have to look at it, but there may be some sort of inverse Google-Apple relationship. But this is certainly less bullish than everything else. And then Tesla, of course, probably the most bearish of the Mag 7 back in the cloud. Whereas a few things are resetting, Tesla is just freshly hitting its bearish stride. There is an inverse relationship between Uber and Tesla. So at least that's what the markets have been trading as. The worse Tesla does, the better Uber tends to do. So as a pair trade idea, something to watch for, the next Tesla setup will probably be correlated with Uber topping. And it doesn't look like, at least in the moment, if this is a range that Uber is ready to move out of, it doesn't look like Uber's topping anytime super soon. We've also got Lyft trying to get back above the weekly cloud. It has gone nowhere for multiple years here. And if you haven't noticed already, there's a little bit of an automotive theme, so I thought I'd look at the rest of them. Ford looks horrific below the weekly cloud for many, many weeks here. Almost 3 years at this point below the cloud. And this is why you don't live in this stuff. I mean, look at the difference above the cloud, below the cloud. That's why you always pay attention to this. on these breakout levels on high time frames and you take this stuff seriously, yes, there was a fake out here. Fine. And you got stopped out. Part of the game. But other than that, the cloud really has not told you to touch this thing in multiple years. That's all you really need to know. GM looks okay. I don't really see a trade or an entry here. It's had a decent move since the weekly breakout. It certainly looks better than Ford from a trend perspective. Toyota also just kind of chopping around here, not quite ready for much of anything on the weekly. Race, this is Ferrari, has done extremely well over the past couple of years. In 2022, it had a weekly inverted head and shoulders, bullish Kumo breakout, and the rest is history. I get questioned often, hey, have you backtested chart patterns? You talk about them a lot. Well, one of the reasons I talk about chart patterns a lot is because they almost always coincide with the cloud. If you're getting some sort of bottomy pattern, you're probably getting a trend reset like this or a trend reversal on the cloud. And if it's happening on the weekly over multiple months, yeah, that is a great signal. The issue is you have to see it as it's happening, because sitting here at 500 and the breakout was at 200, you missed it, right? But that's also pushing all-time highs. So the trend looks great. It's just super late, obviously. And then the other side of the coin would be Chrysler Stellantis. I've watched this one throughout 2024, watched this trade to bottom over the past couple months, took a position last week. I'll add to the position if this breaks the neckline, if it breaks the cloud. Just, again, basic stuff here. Nothing crazy. The business is the business, but looking at the technicals, it has a shot. It has a shot. As long as it doesn't make a new lower low below 13, it has a shot. I have no clue if this goes anywhere. Certainly won't be a Ferrari in a multi-year low or anything like that. Not expecting a miracle here. But as a setup, it is in an interesting spot. Someone also asked me to look at Lucid. Similar idea. There are a lot of these car companies or EV companies in the lower market cap that are trying to bottom. Down for multiple years, flat for a few years, trying to bottom. So as a trade, as a setup, I don't hate it. You could always take a long here with stop loss at like 250. Basically kind of a inverted head and shoulders idea. Cloud doesn't quite like it just yet, but why not, right? You could always open a position, open a starter position, and then add to it as you start to break out. But some of this stuff, Stellantis, Lucid, I don't know how well these charts are going to do, but certainly looks better than this. Certainly looks better than essentially guessing which coin is going to be up in any given day on the alt side. And Sol continues to just look very bearish below the cloud. Bad things happen below the cloud. That's all there is to it. That's all for this one today. Like, dislike, comment, share, subscribe, and happy trading.